Many individuals struggle with finances not from a lack of mathematical understanding, but from the absence of a clear plan. The abundance of financial information can be overwhelming, making it hard to identify actionable steps. This guide offers a structured 90-day plan to reset your finances, build wealth, and jumpstart your financial journey. Over the next 12.5 weeks, we will cover investing, strategic money prioritization, and methods for saving on major expenses. Before improving your finances, an honest assessment of your current situation is crucial. This involves meticulously tracking income and expenditures, mirroring how successful businesses monitor revenue and expenses. Week 1 focuses on adopting this business-like approach to personal finance. Gather financial statements from the past 3 months, including bank, credit card, and debt payment records. Consolidate these to visualize spending patterns. Categorize every expense into 3 main groups: fixed expenses, recurring non-negotiable monthly payments like rent, utilities, car payments, essential subscriptions, and groceries; discretionary expenses, non-essential expenditures that enhance your lifestyle, such as dining out, travel, and non-essential shopping; and debt payments, payments towards outstanding debts, including student loans or credit card balances. Ideally, log and categorize these expenses in a spreadsheet. This exercise reveals areas of overspending or underspending. The goal is to determine your average monthly spending per category. By understanding your income and average expenses, you can calculate your monthly savings rate. This process offers insights into spending habits, potentially uncovering forgotten subscriptions or excessive spending on services like ride-sharing. Completing this step prepares you for Week 2. Week 2 focuses on identifying and eliminating unnecessary expenditures, targeting easy wins for maximum savings. Sort your categorized expenses from largest to smallest and critically evaluate each for potential reductions. Consider a hypothetical example. Total monthly spending of $4,065, covering rent, car/insurance, groceries, dining out, shopping, Ubers, utilities, subscriptions, bars, and coffee. Aim to reduce total monthly spend by 10% to 30%, saving $400 to $1,200. While rent is hard to reduce short-term, other categories offer immediate opportunities. For instance, if $225 is spent monthly on ride-sharing, questioning the habit, convenience versus walking or public transport, can lead to significant savings, potentially $100 to $225. Car and insurance payments, often $750 monthly, also present opportunities. Comparing insurance offers across providers can save around $100 monthly. Reducing shopping and dining out by $50 to $100 each can yield an additional $100 to $200 in monthly savings. Canceling unused subscriptions is another simple way to cut costs. By asking if an expense is truly necessary, you can identify and eliminate unnecessary spending. A $400 monthly saving translates to $4,800 annually, which can be allocated to investments, a Roth IRA, or accelerated debt repayment. After understanding your spending and identifying reductions, Week 3 focuses on automation, embodying the principle of paying yourself first. First, open a high-yield savings account, HYSA, for short-term savings, ensuring competitive rates, currently 3.8% to 4%. This account will hold funds for 1 to 5 years. For example, $10,000 in an HYSA earning 4% annually generates an extra $400 per year effortlessly. Next, set up automatic transfers. A predetermined percentage of your paycheck should automatically go towards your financial goals. This automation is crucial as it removes the psychological friction of manual money management. A common strategy involves 2 automatic transfers, one for your HYSA and one for an investment account. Automating at least 10% of your take-home pay, for example 5% to each, significantly benefits long-term financial health. This works psychologically by deducting funds before they reach your primary checking account, reducing the temptation to spend, similar to a 401k.
Week 4 is dedicated to tackling high-interest consumer debt. Utilize an online debt calculator to visualize how small increases in your monthly payments can dramatically impact your repayment timeline and total interest paid. Automating these increased payments ensures consistency. Contact your credit card companies to request a lower interest rate. Many issuers are willing to negotiate, especially for long-standing customers. A lower APR can save you a substantial amount in interest charges, providing an immediate return on the time invested. Week 5 focuses on a critical component of financial security, the emergency fund. The initial goal is to save $1,000. This amount provides a crucial buffer against unexpected expenses and serves as a significant psychological milestone. For those who have already achieved this, the focus should shift to building a fund that covers 3 to 6 months of essential living expenses. To accelerate your savings, consider selling unused items, taking on a side hustle, or redirecting the savings you identified in Week 2. It is essential to keep your emergency fund in a high-yield savings account to ensure it continues to grow while remaining readily accessible. Week 6 marks your entry into the world of investing, the most powerful tool for long-term wealth creation. Historically, the stock market has provided superior returns. A simple and effective strategy for beginners is to invest in a low-cost S&P 500 index fund, or ETF. This single investment provides diversified exposure to 500 of the largest U.S. companies, effectively allowing you to bet on the growth of the entire market. This set-it-and-forget-it approach is ideal for passive investors. Open a brokerage account with a reputable firm and automate regular contributions from your checking account. The power of consistent investing and compound growth is immense. Even modest monthly investments can grow into a substantial nest egg over time. The key is to remain consistent and trust the process. While reducing expenses is important, your earning potential is limitless. Week 7 is dedicated to exploring avenues for increasing your income. Negotiate a raise. If you have not received a raise in over a year, discuss your compensation with your employer. Research industry salary benchmarks and present a well-reasoned case. Start a side hustle. The gig economy offers numerous opportunities to earn extra income, from freelancing to service-based work. Learn a high-income skill. Investing in skills such as coding, digital marketing, or sales can significantly increase your earning potential. By the end of the week, you should have identified at least one concrete strategy to boost your income. Week 8 is about bringing clarity and intention to your financial future. Go beyond immediate goals and define what you want to achieve in the long term, such as saving for a down payment, funding a large purchase, or planning for a career change. Crucially, you must write these goals down. Studies have shown that the act of writing down your goals dramatically increases your likelihood of achieving them. Be specific about the amount you need to save and the timeline for reaching your goal. Share your goals with a trusted friend or family member to create an extra layer of accountability.
Credit cards can be a powerful financial tool or a dangerous trap. Week 9 is about understanding how to use them to your advantage. If you have the discipline to pay your balance in full every month, credit cards offer valuable rewards, fraud protection, and a convenient way to build your credit score. However, if you struggle with overspending, it is best to avoid them altogether. The high interest rates on credit card debt can quickly negate any rewards earned. If you are unsure, test yourself with a single card that has a low credit limit and see if you can maintain a zero balance. Your net worth, the difference between your assets and liabilities, is the ultimate measure of your financial health. Week 10 is dedicated to calculating and tracking this crucial metric. Use a spreadsheet or a net worth tracking app to list all your assets, cash, investments, property, and liabilities, loans, credit card debt. Calculating your net worth regularly, whether monthly or quarterly, provides a clear snapshot of your financial progress and helps keep you motivated on your journey. In Week 11, it is time to review your progress. Re-examine your spending from the past 2 months and compare it to your initial analysis in Week 1. Have you successfully reduced your expenses? Are there any new financial leaks that need to be addressed? This review process is crucial for ensuring you stay on track and make any necessary adjustments to your plan. As you approach the end of your 90-day reset, it is time to look to the future. Week 12 is about setting ambitious stretch goals for the next 1, 5, and 10 years.
These could include major life milestones like financial independence, starting a business, or extensive travel. Break these large goals down into smaller, actionable steps and create a roadmap for achieving them. Finally, schedule quarterly check-ins with yourself to review your progress and ensure that the positive habits you have built over the past 90 days become a permanent part of your financial life. Congratulations on completing this 90-day financial reset. You have laid a strong foundation for a secure and prosperous financial future. Remember that building wealth is a marathon, not a sprint. By remaining consistent, disciplined, and focused on your long-term vision, you can achieve your most ambitious financial goals.
And if you found this journey helpful, don't forget to subscribe to Elite Money Academy for more powerful lessons on money, mindset, and financial freedom. Please like this video, share it with your friends and family, and comment below about your next financial goal. This is Elite Money Academy, empowering your future one smart decision at a time. See you in the next video.